Hello and a warm welcome to yet another episode of Conversations That Matter. Now, this is a thought leadership discussion that is curated by TransUnion, making sure that we are able to gather thought leaders around a table like this today to unpack critical insights and conversations to truly unlock the power of financial inclusion. And today's conversation is quite special, one that helps us to unlock the economic propeller of entrepreneurship. It's no secret that looking at economic data the world over, SMMEs are known to unlock not only economic opportunities, but also create employment. But if you've spoken to any entrepreneur of late, you'd be well aware that one of their greatest challenges is access to finance. So today, we're going to have a very clear, robust discussion with industry leaders, entrepreneurs, bankers, financiers, and of course, leaders at TransUnion to give us some insight as to how best we enhance the visibility of SMMEs to unlock financial opportunities for them. I'm excited to introduce our panel of experts who are joining us in conversation today. No doubt that they're all going to contribute quite robustly to this conversation, sharing some critical themes and insight that we need to be mindful of. Starting off with the Regional President and CEO of TransUnion Africa, Lee Nike. Good to have you with us as always, Lee.
Thank you so much.
Entrepreneur and founder of Native Child, a cosmetic and hair brand company based in South Africa, Sonto Poe. Welcome, Sonto.
Thank you.
A man who's been leading up the charge of representing SMMEs across South Africa, igniting opportunities to empower them and of course partner them with the right financiers and funders. We're also joined by Mike Anderson, the founder and CEO of the National Small Business Chamber. Welcome. Good to have you, Mike.
Thank you.
And of course, someone else who's also led the charge and spearheaded several initiatives to empower entrepreneurs with the right level of funding and support, not just in South Africa, but across the continent. We're joined by Vingesh Subramani, who is the acting managing executive for SME business at Absa Business Banking South Africa. Vingesh, you're the money man today, so good to have you with us.
Thanks, Google.
Excited to have you all here for this conversation because you really all represent key stakeholder groups that all contribute to this economic environment and climate that we're looking for. I'm aware that today we're going to zone in specifically to the South African market, and perhaps that's where we'll start. Lee, you're the man who operates behind the numbers. You get to see a bird's eye view of what the banks do, what the entrepreneurs do, even what we do as our consumer behavior that also influences access to financing. Let's just start there. SMMEs and their lack of access to capital. What are the main causes from your observations?
Well, it's an interesting question, a place to start. I was reflecting this morning that there are 7.8 million unemployed people in South Africa. Mm-hmm. Yes, there's been slight improvement over the last few quarters. However, it's a big number. And in the end, you ask yourself, why SMME is important? And it's a global challenge, not just African, but in the case of South Africa specifically, we know that SMMEs are the ones that create jobs. Right, so if we're going to solve our unemployment challenge, we're going to focus on small businesses. The facts are clear. Small businesses create between 1 in 5 jobs. The more of them create jobs, the more we have solved unemployment and the more we actually drive the demand side of our economy. If you want growth to truly happen, if you go from 1.1% of GDP, we got to solve for SMMEs. What we can tell you from a TransUnion perspective is that the consumers are pretty strained currently from an indebtedness perspective to the bank. So we know this strain is there. If a bank or a business wants to grow their businesses, you got to solve systemically. In the end, SMEs are the systemic fix we got to focus on. When we get that right, because we will get it right, we'll release our economic potential.
Got you. So we know that we need to tap into SMMEs, and Mike, this is potentially where I can bring you in here. You are literally part of the heartbeat of SMMEs and helping them to grow and propel. You've often mentioned that there is no shortage of money. It's a systemic theme that Lee highlights. What's your observations around the lack of adequate access to capital?
I'll go with you 100%, and thank you for what Lee said. And you know, I've been working on this for over 3 decades now. I'm passionate about it. I talk to thousands of SMEs around the country all year long. And the big thing is that SMEs have never behaved in a way to borrow money, and funders have never understood the actual SME.
Yeah.
And there's a disconnect between the two.
I want us to go back to that word behave, right? Because I think this is where we just might be peeling off at the nub of the issue. What do you mean? Because entrepreneurs might respond and say, hold on, I'm generating revenue, I'm making a profit, I'm selling my products, clearly I'm doing well, show me the money.
Invisibility. They've been invisible to the funder, and that's the big problem. They're not showing visibility. And not because they don't want to, they don't know how to. And that's changing a lot. I mean, I know working with a lot with Vignesh over the years and other key players in the industry is that we are now educating, we're inspiring, we're driving SMEs to become visible, what they need to do to behave. You know, are they credit ready? Are they funding ready? Have they got financials? Have they got bank statements? Are they SARS tax compliant? So these are the kind of key areas that they need to do to become connected. And the problem with funders is exactly the same way. They believe that every SME is unfundable. So there's the disconnect between the two. From an SME perspective, they don't believe that there's money available. We know that we spoke earlier, there's between 350 and 750 billion rand available, ready to be provided. But SMEs don't believe that, and they don't understand that. And funders don't believe they are funding ready SMEs.
Mike, I'll tell you what, we've got an SMME here, and we've got a funder represented by a bank. So maybe let's get Sonto's perspective as an SMME. Before we reflect on your journey, just in terms of your observations as an entrepreneur, funding, has it always been easily accessible?
Absolutely not. I don't think it's something, I think as an entrepreneur, that's easily accessible. And just the help. First of all, for you to get any amount of money, you need some sort of credit record. And if you haven't taken credit and you've been clean and sort of like avoiding debt, you're in trouble, because then where's your credit history? So I think from an entrepreneurial point of view, personally, I found that it's difficult to even know what resources are out there for you to get the funding that you need. I personally have had to be very resourceful in trying to get a little bit of help along my journey.
Bootstrapping, friends and family,
100%.
Dipping into your savings, a story that's very familiar to many entrepreneurs. Keeping with this theme though, Vingesh, before we actually deep dive into some of the solutions, your view, entrepreneurs say it's difficult to get the money. Do we have the money?
Absolutely. I mean, the willingness of financial institutions to look at funding SMEs is absolutely, the appetite is there. I think that where the challenge comes in is, and maybe firstly just to acknowledge the resilience and resourcefulness of SA entrepreneurs, right? From my experience, I can tell you that when they need to get something done, they get it done. And so that's where speed, not just access to finance, but the speed of availing access to finance is really, really crucial. But when we talk about the concept of being funding ready, we think that you've got to be funding ready at a point in time. Funding readiness is a journey. You're not funding ready just because you're ready to apply for finance today. The journey to becoming funding ready is actually built over time.
Sure.
And that's what we've got to become really obsessed with, is how do we enable businesses, whether they are formal or whether they're informal, whether they are registered with SARS, whether they are registered with CIPC, whatever it may be, how do we enable them to be funding ready from the time that they start this business journey? So that when it comes to application time, it's not a case of, I've got to go and get a full checklist of stuff to go and put this application in front of the bank. Actually, I've done enough over the course of my journey as an entrepreneur to be ready to be funded now. And that's where we've got to do a lot of work further upstream, as opposed to at that point in time when the entrepreneur needs funding.
And I think what you're describing here is a very critical point, which really speaks to much of the experience that both yourself, Mike, and Lee happen to have. The key words that you're using, funding ready, visibility, and of course making sure that there's accurate data to actually support the level of growth that the entrepreneur needs. Maybe let's just start off on the education point here, Mike. This is something that you've done for a long time, and it goes back to the basics of admin, but help us understand how we shape behavior, how we increase visibility in practical terms for entrepreneurs and what it truly means.
Yeah, absolutely, you know, and I really enjoy what Vignesh said there. You know, we're launching a powerful initiative in partnership with, of course, with TransUnion, access to finance, years in the making, and this is the very essence of your question, is that funding readiness, like Vignesh said, starts when you start your business. And 80% of access to finance, soon to be launched, is funding readiness, visibility, and teaching them exactly what they need to do to be visible, to be funding ready. Because when the time comes to access funding, if you're not funding ready, it's too late. So the whole process is about educating, it's about inspiring, it's about driving, it's about teaching, but showing exactly how. Traditionally, no one has ever showed an SME what they need to do and how to do it.
How detailed have you had to be with some of those educational efforts?
Extremely detailed. Show me how, show me what I need to do. Because the point is, it's very simple to be funding ready. It's very simple to be funding ready, but you need to understand exactly why. Let's not assume that an SME knows how to be funding ready. Let's show them exactly what they need to do to be funding ready. That is the biggest problem in South Africa, or not in South Africa, around the world, is funding readiness and visibility. Visibility is that you need to be seen. You need to be seen out there by the funder, by the community, on who you are as a business, who you are as an entrepreneur, and then access to finance is a lot easier.
Staying with you, I'm just keen to understand, some of the examples you've witnessed from various entrepreneurs, the ones who get it right and the ones who get it wrong. What are the fundamental differences there?
I think the big difference between the ones who get it right and the ones who get it wrong is exactly that: prepared to be prepared. Bank statements, SARS tax clearance, your ability to repay the loan. These are the kind of things. For example, I cannot borrow 5 million rand or apply 5 million rand if I'm doing a turnover of 50,000 rand a month. So you need to have these dynamics in place. And we at the NSBC spend majority of our time showing these SMEs exactly what to do, the examples, the typical application, the funding readiness guidelines of what they need to do. And if you get that right, the money flows. Borrow money for the right reason. Money for growth is imperative, because what does it do? Like Lee said earlier, it creates jobs. If I'm running a printing business, I had an example of that, of someone in Khayelitsha who got a small printing business. They need another printing machine.
Sure.
And if they get another printing machine, they've been in business for 10 years. If they had that additional printing machine, they could employ 3 more people. This is job creation at its finest.
Yeah.
So funding for growth is vital. Funding because you're losing is not a great option.
100%. I'm glad you went into some of the detail there, which we will peel back into in just a moment. But speaking about this visibility, as Mike has mentioned, Lee, it goes back to what entrepreneurs typically don't enjoy. It's the admin, the paperwork, and the processing. Santo's looking at me because I assume you agree. You feel as though it takes you away from your efforts as an entrepreneur in practically building your business. But that too is actually part of building the business. Help us understand how, as TransUnion, working with your industry counterparts, that information actually helps to create the visibility, and it's the data you're able to mine to track one's creditworthiness.
Agree. Well, there's a lot of things we've already covered, so it's a really good conversation. The first thing that Vignesh mentioned is what we call a point-in-time decision. So, for example, the system has said, Santo, are you good or are you bad? But right now, what Vignesh said is it's a journey of decisioning, right? We need to realize that someone could be bad, but becoming better, right? We all have hopes and dreams to become better individuals. And I think a large part of what we've been doing now for quite a while as TransUnion, trying to figure out how we model the behavior of humans. Could I model that you have a dream and you're becoming better? Because many people said, why even bother as an SMME? Why ask for funding? These guys will say no. So Mike, in some regards, from an NSBC perspective, there's a multi-layer journey. For those that have been successful, can we show the stories of success so other SMEs can believe it's possible? For the funders, we need to look at a person saying, can I see your hopes and dreams, as opposed to deciding on the fly you're good or bad? And that's something that banks, including ABSA, have been for quite a while changing how they think about you. You aren't just good or bad. You're a person that's evolving over a period of time. So that's the second thing. And from a TransUnion perspective, we often talk in a tech perspective about alt data. The reality is that for the 7.8 million unemployed people that have hopes and dreams, they aren't like us at this table. They have different ways to be seen. We as funders and as the industry must employ techniques to see them for who they are and where they are in their context. The third thing to quickly mention is that what struggles an SMME is the paper we ask for to access funding. By the time we filled in all the paper, we've lost our business, there's no cash flow, and we have to go back to normal employment. We kill hopes and dreams. So what has happened over the last few years, and Mike's been driving this with NSBC now, is to challenge what paper is needed before a decision can be made. For me, an SME is happy to hear it's a no, but tell me quickly. Don't give me hope for 4 weeks and you tell me no, and my cash flow is gone. So I think it's about realizing we live in a digital world that's mobile first. People realize it's tough out there. Find new ways to see my hopes and dreams. So the point of the story is that SMEs must evolve to recognize the world is changing. Funders must evolve for new techniques. And education that Mike speaks about must not just tell them what you need, but tell them stories of success so others can believe. When we start to believe, it gives us hope as small businesses as well.
Got you.
I would just like to get a response from the panel. What, from an entrepreneurial point of view, what do you mean when you say visibility? And that, yes, there is funding, it is available for entrepreneurs. Having had my own experience and a friend of mine who's currently going through a process of trying to also acquire funding, is that you sort of like, you try and apply for funding through the bank, but because you're not making enough money, you don't get the funding. I've had the experience where once the business really starts at making money, then the banks were offering me fund. By then I don't need it.
Correct.
I needed it then. What is it that you're actually looking for at a point where I actually need, because I feel like banks need to be more invested, or funders need to be more invested in ideas and entrepreneurs. Because we drive the economy. That's just the bottom line. Because once I don't need it, why are you giving me the loan? I don't need
Got you.
it.
Well, a great learning opportunity.
Well, 100%, and that's a good question, visibility. There are very few people or very few businesses who understand that word visibility because we haven't informed them of that. So basically, you need to be seen by the funder. You need to be verified. You need to be credible, and you need to have data. So those are the three critical areas. A snapshot of inside your business is what funders are looking for. Because if you can't be seen, your funding requirements will only ever be a dream. That's the criteria. But what's quite incredible to know is that 98% of SMEs who apply for funding that get rejected, if they did the right thing very simply, they would get funding. Now imagine if we could change that collectively.
To be controversial, Mike, I think that's only one half of what Santo is pointing out. Santo could be right here with the best idea, a future unicorn for Africa. She's got all the ideas and the plans to make it happen. You may have that, you may have all the ticks that you've mentioned, Mike, but the system can't see you for who you see you are.
You don't see the potential.
Correct. And this is the thing about the way decisions, be very, very direct, and Vignesh will definitely comment from the funder side as well, is we've had to evolve the way decisions get made. The truth is that for a long period of time, you either were good or bad. That ability to see the idea earlier and where it's going isn't something that the system was designed to. But over only the last few years, it's starting to evolve. And I'll be honest and say that not every funder is as innovative. Funders must also be challenged. If they've got that much capital and the balance sheet available, it doesn't mean they've got the techniques to see potential. Now, it's quite technical, but the techniques have evolved to see potential in small businesses, and not just in Africa, in India and in Latin America. These are proven techniques. What I can tell you, Santo, is that we by no means, as funders, are able to see SMMEs. The reason these conversations matter is because we need to provoke the industry to say, we've got to be relevant, find new ways to challenge how we work. But we've got to change how we work, because you could be here with your idea, we'll not see you. We've got to change the techniques we use to evaluate you. Vignesh, does it make any sense?
With banks and financial institutions, we have something called what is a risk appetite. And there are thresholds up to which you have higher risk appetite, and there are certain thresholds in terms of values of funding requirements where you have lower risk appetite, or the risk is higher. And so you've got to mitigate that. So one of the things we definitely see playing out with new business ideas is that there is a myth in South Africa, particularly in the South African context, that an SME cannot get funding if you don't have collateral. That is something that you will hear from a lot of entrepreneurs. Right? What that does is that before they even put their hand up to say, I need funding, it's almost like a disqualification by themselves, not even to approach a financial institution, because like, how am I going to go and ask a bank for X million rand if I don't have collateral? How we've worked to mitigate that, and I'll use an example of that. So we launched a women in business proposition, because we know that youth and women in business are underserved. If you're saying that SMEs are underserved, we're saying that youth and women in business are even more underserved than the traditional SME. And so we launched a bespoke proposition. One of the things we've built into that is what we call alternative lending solutions. So to say where you have a business idea, where you don't have collateral, there are ways and means, in terms of what you mentioned, the change in how we do this, to say there are guarantee providers, there are development finance institutions that can support and come in and say, you've got a good business idea, you have solid management, this is right for the environment that we find ourselves in, you don't have collateral, that's okay, But what we can do is indemnify the loan through an alternative lending solution like a guarantee to say that even though you don't have collateral, there's a means for you to still get funding. What we've got to do is encourage more entrepreneurs to say, put their hand up and come forward and say, I do need funding, as opposed to disqualifying themselves through this myth in South Africa that we have that, well, if I don't come forward and if I don't have collateral, I'm not going to be considered anyway.
Got you. Vignesh, there's a few lessons I'd like to pull out from many of the themes that you're all building up, and I'm excited as to the direction of the conversation, because it almost seems as though you're forging a relationship with the entrepreneur to actually walk the journey with them versus just an ad hoc experience of access to financing. Talk us through a few examples, how you've managed that, some lessons that entrepreneurs have learned, and maybe that can also work as a measure of reflection to fully understand how much further we're able to build that visibility for entrepreneurs.
So funding is but one part of the leg. We think that, we often think that we give a business funding and we've done a great job, right? When we started this year, it was quite clear that economically there were a lot of great things. We talk about 200 plus days without load shedding, fuel prices were at an all-time low, interest rates were we were off the grey list, exactly.
Yeah.
And the environment was really conducive. And we did a thought leadership piece in the beginning of the year on the back of an index that we launched last year, which said that SMEs are cautiously optimistic about 2026. Lo and behold, a couple of months later, we know what's currently happening in the Middle East, and a lot of what we thought was positive in the beginning of the year has now shifted. What that reinforces is that you can't take for granted that the environment in which SMEs are operating, just because the environment is conducive that they're going to thrive. We still have a responsibility to hold the hands of an SME even after we've given them funding. Mm-hmm. A classic example of this is what we do through enterprise development. So even after we've given funding, your job's not done. You've still got to hold the hand of the entrepreneur to support them through that journey. Often what we think is once we've done the funding, we've done a great job. But there are things like post-loan monitoring, mentoring and coaching, non-financial support that you have to equip SME. And we've done that through our enterprise development business, done that really, really well. And we have some great examples of how that's actually borne fruit. Whereas in other instances where you've given the funding and said, well, you're good to go and run on your own, you kind of see that it goes into a default position a couple of years later. So that involvement on an ongoing basis is really, really important, even beyond the point of funding.
100%. Sonta, I'd like to bring it back to you here. I'm hoping that you're satisfied with the level of response that you've received, but also for us maybe to use this as an opportunity to reflect on your level of growth. Native Child, if I'm not mistaken, has been in existence for more than a decade now, just almost a decade.
Almost, yeah.
You've grown from strength to strength, available in retail stores. So that obviously tells us that you've had a tough journey, bootstrapped and all, but at some point, the support, the lessons, the mentorship, the opportunities, the scalability of your business is also something that's been fruitful. So there's clearly something that you've done right along the journey with the correct partners to actually get you to your level of success. Share some reflections there as to what worked well and what can be improved upon.
My journey, as you obviously know, is one of the success stories, but there are many, I guess, other entrepreneurs who are in the same space who no longer exist today. And I do believe it's because of the conversation that we're having now, the support, the financial support, the mentoring. In a type of a business where, the payment cycle is quite long. You don't make and deliver your products today, month end you get paid. That gap is usually 2, sometimes 3 months, depending on which retailer. And as you grow, that gap kind of opens up even more because now you need more money. So cash flow is extremely important. We were pretty close on a few occasions. Sure. But somehow managed to get on the other side. I think I've just had that inborn entrepreneurial spirit where I will find a way. But unfortunately, not everybody has that. And so I think this type of discussion that we're having is critically important. And also just want to add, I genuinely feel like there's a disconnect. He was mentioning that you can get funding even without collateral. There's a situation now with another entrepreneur that I know now that has that problem. Has put down 5 million, needs to build a building, put down 5 million, needs to renovate, already has, I think, about 15 tenants. approached a bank. It's not ABSA, but did approach a bank, and they want collateral. So what is the entrepreneur? They want collateral. They're not willing to give her the loan to renovate so that the tenants can go in. There's already letters of commitment, but the bank is still not releasing the money. And now asking me as someone she knows, do you either have the money or can you sign surety on my behalf? These are the actual issues that we're having on the ground. So on one level, the bank says one thing, but in reality, that's not, again, let me say, it's not ABSA. But that's the reality that we as entrepreneurs are facing.
Got you. And I think this raises a broader question, right, in terms of what visibility looks like, but also that knowledge that, Mike, you had reflected on, that entrepreneurs need to know the right kind of capital to suit the right kind of need for the business. It's really open to the panel, but I guess I'd like to start off with yourself, Mike, briefly, and open it up to some of the suggestions as to how do we expand that knowledge and information to understand the different types of funding that are available, and how do you increase the visibility of the business to be appropriate for that kind of funding, whether it's debt, working capital, managing cash flow, or even grant opportunities that might be available?
I think the biggest game changer has come now than ever before, because, and I think that Lee, you touched on it, and so did you, Vignesh, is that there are no bad applications anymore. You know, if you register on Access to Finance coming up, which you can do now, if you're bad, it's okay to be bad. We're going to show you how to become better, how to become good, and how to become great. And so you can get that funding. So there is no disqualification anymore.
And the right funding,
and the right funding. And the big part about Access to Finance, just to touch on that, is that now you're funding ready, you're credit ready, you're the right candidate. But now let's route you to the right funder, where traditionally a lot of applications, good applications, has gone to the wrong funder. And traditionally they've been declined. Historically, not anymore, and not ABSA, by the way. Historically, is that declined and no reason given. That has been the biggest change of recent times. It doesn't happen anymore. Well, it does happen, but on few occasions. So if you're declined, why are you declined? And let's educate you on what you need to do quickly, so we can not discard your application, keep it tight, and then elevate that, and the funding will take place. So I think the biggest change has come over time. And the biggest change has come over time is funding ready. Gotcha. And that to me will be the big game changer. It's going to close that gap. It's going to increase visibility, exactly what was said earlier. And I think that's the important aspect behind it.
Got you. Lee, let's align this to make it more practical to Sonto's colleagues' challenge, especially when it comes to asset-backed financing.
Sonto, it's worth noting this, right? The problem you're describing is real. I recognize it. As a guy that runs a credit bureau, I see rejections all the time. I know how you feel. I know how your colleague feels. Here's the provocation to the funders. If we're saying to SMMEs, Mike, let's come believe in us and trust in us, the funders need to evolve how they make decisions on colleagues like the one you have right now. So for me, it's a tripartite kind of discussion. Many people need to come here. The reality, though, is that the reason we have these conversations that matters is to provoke the industry. We've got to change to be relevant. Every big business, whether it's a bank or a non-bank, is looking to drive growth. That's the reality. We are saying that SMEs are willing, they are able to take on financing, change how you make decisions on small businesses. We are the future. So my provocation is not just to SMMEs, because tell you to be better is one thing. You can be better. When that rejection hits you, it's hard. I get that. I'm saying to the funders, change how you make decisions. And like Vignesh has described, it's a journey. We're going to play multiple roles. So my provocation is multifold. And the reason why this panel is together is that it's the whole value chain, Sonto. We all need to improve in some way. Otherwise, there will be no opportunity that's realized. We need to win by coming together. So are we there? Not yet. But I'll tell you this much. As a guy that's been in the industry for over a decade now, there is change happening. We need to provoke the other lenders, whether it's banks or non-banks, to come to the party, right?
Got you. Vignesh, I'd like to put you on the spot here. If you had to assess the situation, top of mind right now, how do you read it and how would you approach it differently?
Yeah, and thanks for sharing, actually being willing to share the example. So I think it's obviously here that's very close to you and very important to you. I think one of the things we've got to appreciate that, and I've seen this working with SMEs over the last decade and a half, is that every single application, every single customer have their own merits, and they're very unique in their nature. Just because something has worked for Lee doesn't mean it's going to work for Mike. Just because something worked for Mike doesn't mean it's going to work for Vignesh. Every single customer, every single business is very unique in its nature. Every single application is very unique, and you've got to look at the specifics of each request and understand why that bank might be feeling a certain way. But you asked a really simple question. You said, what do we need? You know, when you say this is what you got to have to, and the guidance that I can give is 4 things. If you're evaluating your own business or anybody else's business, the way banks, well, I can speak on behalf of ABSA, is you look at it across predominantly 4 dimensions. So one is management. So is the person running this business well versed in what they are planning to undertake here? That is really crucial. More than backing a business here, you are backing an individual, right? So
the jockey versus the horse story, right?
Exactly. And so management is really crucial. And Lee, we probably unpack it later. One of the trends one of the themes that I see emerging a lot is people run really successful businesses, but their personal credit histories have been impacted quite significantly and what we do is that we can't separate the two. So I think systemically there's a discussion to be had to say, how do we start viewing entrepreneurs for the business and not just keep on kind of, penalizing them for a decision that they made, 5 or 10 years ago. So management is a really crucial one. Is the experience of the individual aligned to what they're undertaking or what they're doing? The second one is what we call, track record or financials. This does not mean that you must always have financials in order to get lending. There are customers and SMEs, like I can tell you in our world, 15,000 of them every single month are being approved for lending without financials. And so it's about having some level of track record, whether that be in your personal capacity or whether that be in a business capacity.
So that opens up opportunities for both those in the formal and informal space.
Absolutely. But record keeping in some shape or form, particularly as a bank account, is really, really important. And today we evolved into the likes of wallets and mobile money and all of those things. And as we look forward, you've got to think about over and above bank accounts. How do we start looking at those kind of data points to evaluate risk overall? The third element is collateral. Now we speak about collateral in the sense, and then the last element is the environment. So is the business that you're doing or thinking of undertaking or already in, is the environment conducive for what you're trying to do? Now, if you think about these 4 elements, if you think about these tripods that we have here, right? They are standing on 3 legs. They don't necessarily have to stand on 4. Even if you take away one of these elements, the other 3 elements have got to be really, really solid. So even if you take away collateral, management, track record, and the environment must be really strong. Then you have a really strong case of what you want to do. And that's the kind of guidance that I can give. So if you think about these 4 concepts, any business you're thinking about, when you're thinking about applying, measure yourself against these 4 criteria. Even if one of them are missing, it's okay. Don't write yourself off.
Yeah.
But if 2 of them are missing, you've got a bit of a challenge.
Yeah.
And more than anything, that's an indicator of where to grow and develop, and maybe solicit the help and feedback to say, hey, I'm struggling in terms of management or this other organizational structure factor, so how do I get better at it?
It's so important what you've said, and it's interesting about your business, right? Today, everybody wants to give you money, right? We were there a decade ago.
Are you taking it?
Right?
No.
But it's interesting, right? It's interesting. Let's just wind back what Vignesh has said and what Santo has told us about. When you were a decade ago, 8 years ago, they were not there, right? Here's the point, is that a small and a micro business is intrinsically linked within the jockey that is both a business leader and a human in its consumer state, right? And so the truth is that you may have a really good idea. When we look at these 4 dimensions that ABSA looks at, one of the proxies is, let me look at the jockey in his own personal capacity, because it's a proxy for how you could behave as a business owner, right? Now, as a person that runs a bureau, we give out free credit reports every year. Very few people take it, right? Because it's scary, right, as to what's on those credit reports. Now, one of the things we're trying to do via NSBC and via other such platforms is to create more education about looking after your own personal health. I could be here having this wonderful conversation. I could have the best idea, Santo, after this meeting, and my credit health is really poor right now. Whether it's ABSA or another bank, they're going to say no to Lee, or they may limit how much they give me. So I would just say it starts with me, Lena, it starts with you, Sonto, it starts with you, Vignesh. How do we look after our financial wellness? This is your passport to the game, right?
Got you.
And many people don't respect this. It isn't a pleasure running a credit bureau. Let me just tell you, Sonto.
Yeah.
We say no, right? What's going on? Why have you done this? In the end, it comes down to a lack of education. We didn't know any better. Or we knew, let's take a chance. ABSA won't ignore me. They're going to ignore you because the data talks. Vignesh has called out the bank account, your credit report. These are things that are controllable. There are other things we must change as an industry to see potential. And I must tell you, Guguletu, that there are things that are evolving. So, for example, we launched about a year and a half ago South Africa and Africa's first telco-based credit score. Without having a bank account, Vignesh, we can now profile using your mobile activity. It's world first, starting here. That's evolving, it's coming. So you got to be patient. It's a journey, right?
Got you.
Other things like mobile wallets, we're working with a large telco in another country I look after, where government has said we have 100% coverage in this mobile wallet. Build our scores using wallet activity. Because in the townships, we are sending money, send money, e-wallet. Why should we bank that way? Why is the bank telling us come into a physical branch? The world has changed and the banks are being left behind. So I think it's exciting to be in this conversation. And my provocation, Vignesh, to me, to you, to Sonto, to Gugulet, all of us have a role to play. But as long as we put pressure on the system, we'll realize our SME potential.
Got you. And maybe I can challenge you on that particular point and put some pressure on you. The data is one thing. Having more aspects of data mining is also quite positive. And using that data to share decisions and outcomes is also important. But what are we doing in terms of assisting the change in behavior? As Sonto mentioned, she had to bootstrap at some point. You using your cash and you're not building an adequate credit record, and you forget that that's actually part of the process to help build your level of visibility. So in terms of using the information adequately to not only take a decision, but also shape the behavior to enhance the funding journey, where are we as an industry there?
So my background's actually in digital transformation. That's where I started my journey. I can tell you, if we keep behaving like a bank from 30 years ago, we're not going to win this conversation. So I can tell you, without mentioning names, right, there are some lenders that are evolving for relevance. They recognize that the SME only has a phone in their hand. They recognize there's no physical building today. There's no physical collateral. They recognize that paper isn't a thing. We don't have 5 rand to photocopy. Can we not email? Can we not find another way to use data sets? I would say that there are many ingredients, Google Earth, available, but the recipe has to come together in a certain way. If we keep ignoring that the game has changed, we're trying to play another game, we're all going to lose. So I would say everybody has ingredients. The winners are those that actually change the way they work fundamentally. Remember, the competition isn't a physical bank, Vignesh. You're not competing against a bank. You're competing against Amazon.com and Google, and you're competing against people that have off-bank funding, right? We got to change the game.
100%.
Can I just add?
Sure.
I think that's one element you bring in terms of the actual entrepreneur looking at their history and their behavior. Sometimes a person doesn't have a history because they just don't like debt, so they're almost like invisible.
Correct.
In that case, it's not that they are bad. They just don't have a history. So I'm glad to hear that now the industry is sort of like evolving to look at other ways of sort of like assessing the entrepreneur, because I feel like it's unfair if you've kept a clean credit record by not taking credit to now be penalized for that.
What I can tell you though is that there's at least 5 funders in South Africa busy testing this out. That's hope, right? And it says that, remember, the data is always important. There are 16 million people that have no access to the finance system. All those people have cell phones. So now we're asking the question, by looking at that cell phone information, could we predict that they could be a good customer? Now, I can't solve for all 16 million, but I'm telling you now that of the 16 million, we can already see 2 million that could be good customers. Now, the trick is to get banks and funders to say, listen, that's interesting. Let's test it with TransUnion. Let's test it with another bureau. It doesn't actually matter to me. But the thing is that innovation is here. If we ignore the innovation, the bank will become irrelevant. The fund will be irrelevant. But we've got to keep pushing the boundaries on innovation. And I must tell you, Sonto, to do what we're doing right now took 6 years of banging on doors that were closed and locked. But we can't give up. So I'm saying for SMEs, they can't give up, we can't give up, banks mustn't give up. But relevance is a choice. We've got to choose relevance or we'll all become defunct.
What I'm enjoying about today's conversation is that we are pushing the boundaries and really trying to ensure that we understand each other. So it's quite clear that there's some key lessons that we all need to learn as an industry, as entrepreneurs, and working together in collaborative efforts to ensure that visibility of entrepreneurs is heightened, but also the innovative solutions that funders are able to bring to the fore are also brought about quite quickly. Mike, I'd like to give you the first start to the parting shot. You obviously have a bird's eye view of many of the participants in the industry, both entrepreneurs, how to get ready, stay disciplined and walk the journey, but also for the funders, all forms of them, to make sure that they are understanding of the dynamics that entrepreneurs face. What's the one, I guess, challenge or proposal you'd like to see that could shift the needle within a year's time from funders to unlock more capital and make it easily available for entrepreneurs, but also entrepreneurs to make themselves more visible?
Guguletu, I think that what Elise said now, and to add flavor to which will come to your question, is that we did a recent survey of 270,000 SMEs in South Africa. Only 12% have known their credit score in the last 48 months. Ooh. So we see the biggest need and the biggest drive now for financial health, to self-educate yourself for your business around financial health, because that'll get you your foundation to where you need to be. Mm-hmm. So from an individual perspective, improve your financial health, know your credit score, because it doesn't necessarily mean just about getting funding. It's the right thing to do across all areas. Because the point is, when an SME wants to get funding and they want it today, it's too late. You know, you need a few months to be able to get that credit score right, to get your financials in order, to get your clearances right. Someone said to me on stage not long ago, what is the first thing that I need to do to get my business going? I said, first of all, you need to be funding ready. Because funding readiness does a few things. It first of all gets you to be funding ready, but it also gets you to be supplier ready. Because if you want to do business with big business and government, you need to be supplier ready. Mm-hmm. So the point is that funding readiness is important to get funding, but it also allows you to become funding ready. It lays the foundation to build your castle in your business. So that's the key area. And for funders, I think that Lee said it earlier and so did Vignesh, for funders to understand the different dynamics of the SME, to look beyond and allow those SMEs to be seen, to be visible, but understand more about that business, because the dynamics have changed in the funding fraternity. So we want funders to understand the SME a little bit more, to structure funding in a more unique way, to be able to alleviate the pressures, and of course for SMEs to be visible, the big word, visible. And because if you're not seen, the funders won't see you. Yeah. So those are the kind of key areas, because funding is available. There's a lot of money available, and we need to close that funding gap. We need to break that barrier, and that is our job to do that from now.
100%. Vignesh, you're but one man representing one institution, but I presume you work in collaboration with many other partners. But as you continue to shift the needle for South African entrepreneurs, what are you able to do differently in a year's time?
Lee mentioned it. A lot of this is, work in progress, particularly around digitization. Now, it's not just good enough to tell an entrepreneur, yes, you're good for funding. You've got to be able to tell them that in the comfort of their own home. Not all the entrepreneurs have the luxury of going to a branch or a bank to go and sit with somebody and discuss it. So lots of work around digitization, digitizing lending journeys is a real priority for us as a bank. So imagine a world where when you log into your banking app or your connected banking platform, you're immediately able to see how much you're good for, and you can get it very, very quickly. Gotcha. Without having to go through any paperwork or submission of any information, etc. So that's a big priority area for us as a bank, and those capabilities allow SMEs to get the funding very, very quickly. I think over and above that, what I do want to mention, Gugu, is my ask to all SMEs is this: when you make a financial decision, particularly as a business, don't preempt what a bank might tell you. Keep your banker and your relationship banker really, really close to your business, particularly as you're also going through this growth trajectory. The last thing you want is to experience a lot of growth and not be able to fund the growth that you're going through. Mm-hmm. Make your banker part of the financial decisions that you make in a business. Whether you're looking at acquiring equipment for your business, whether you're looking at expanding, don't rush into doing it yourself. because as an entrepreneur, you're resilient, you're resourceful, you want to get things done. We appreciate that. But make the bank part of that decision. I was sitting with an entrepreneur in Kwadukuza a couple of months ago, right? And she's built a great business, and she's done everything, by herself. And I said, it feels like you feel like you're on your own in this thing. Actually, you aren't. You do need to realize that there are people there that can support you. And today you've seen this kind of growth. You potentially double that growth if you have the right funder, behind you.
Yeah.
So my ask to SMEs also is, in the spirit of partnerships, is we have a relationship banking model as well, right? Keep your banker close to you, no matter what financial decision you're making, and explore every avenue before you rush into doing it yourself, because the long-term benefits are a lot more.
Got you.
Even worse, don't rush into getting into a debt commitment with potentially something that could hurt you in the long term, because you're so eager to get things done that you might sign up for the wrong type of solution at the wrong funding or the wrong structure.
Yeah, without having explored the options available first, 100%. Sonto, as an entrepreneur, 8 years in the game, we want you to see you make it to 10. So what will it take, number one, for you to get there, that funders and supporters can offer? And outside of that, secondly, briefly, a message to other entrepreneurs to increase their level of visibility and also grow in order to be competitive.
Interesting you say that, because every year I feel like, okay, we're growing, but I do feel like we are at a point where we're about to do the big jump again. And so really just a plea on behalf of entrepreneurs like myself that number one, bankers to respond with speed. Sometimes we lose a lot of opportunities because banks are slow and we move and decisions are made now. If you take too long, you miss the boat. Look at your interest rates, because sometimes it makes it difficult. Is it worth it? Is it not worth it? Maybe let me try something else. And then on behalf of my fellow entrepreneurs out there, I would like to plea on their behalf that for funders to invest in ideas, because some businesses do take a while to grow and to get to where they need to.
Mm-hmm. Got you on that one. Lee, I think this leaves you in an appropriate spot for a parting shot to share your thoughts and considerations, especially given the feedback that we've heard. Investment in technology, funders creating a lot more visibility and unlocking capital for entrepreneurs. And of course, investing in the big ideas and offering the right kind of financing and support for entrepreneurs. It clearly means we have a lot more data to receive from various players and providers in the industry, even those who might not be in the traditional banking space. But your parting shot is to, how TransUnion, in partnership with its peers, will approach things differently going forward.
I think there's two provocative thoughts that come to mind. One, it sounds simple, but knowledge is power. So let me break it up. So one, for the funders, we need to realize that having better insights into the emerging consumer, the one that is on the phone, not in a physical branch, the one that doesn't have a bank account, that knowledge is power. There's something to be said about that. By seeing people differently, by seeing SMEs differently, there's power there. So knowledge is power. For Mike and for the NSBC and other such players, there's a need to put knowledge into the hands of SMMEs to allow them to become funder ready, supply ready. Whatever is being done, more can be done. The more we do, the better it is. And then for the SMMEs, knowledge is power in the sense that for small micro businesses, the SMME, the jockey, is the human that has that credit report. And understanding that it is the start of a journey. It could be blank, it could be not blank, but just by understanding where you start off in life allows you to make your next step. So if knowledge is power, my final thought is that relevance is a choice. For a funder, you choose to be relevant to SMMEs. For NSBC, for TransUnion, we choose to be relevant to a community that's key to the economy. And for SMMEs, to have the ideas, but to decide, for me to be relevant, to go from idea to scale to commercialization, I got to choose to be relevant and make choices like education, dealing the 4 steps that Vignesh spoke about.
Yeah.
These are choices. So knowledge is power and relevance is a choice. It sounds simple, but it's a lot more complex than that.
Got you. Knowledge is power, but relevance is
a choice.
A choice. There we go. Well, we started off this conversation, I guess, looking to find out what visibility is, and we've layered it with clarity, understanding, and partnership. More than anything, the big question that often sits with entrepreneurs asking, where is the funding? There's no shortage of it. It's there, but you need to know how to access it adequately. And hopefully on the back of this conversation, many more entrepreneurs, funders, financiers, enterprise development programs will all continue to collaborate to unlock the true potential of SMMEs in South Africa's economy. Vignesh, a great pleasure having you with us here today, sir. Truly appreciate your time. Hoping all the right calls between yourself and Sonto will be made. Mike, appreciate your collaboration and participation, really reflecting on 3 decades of effort and work and the innovation and changes that we've witnessed in this industry. Sonto, thank you for your robust nature in sharing the harsh reality, but also amazing potential of what the journey of entrepreneurship entails. And Lee, thank you for underscoring this with the innovative power that continues to exist within institutions like TransUnion, really working as a collaborator and facilitator to have all key stakeholders at the table. And to you at home, well, thank you for watching. You're more than welcome to engage and share your thoughts, comments, and feedback with us here on our social media pages. And until next time, be sure to also contribute to conversations that matter, unlocking the opportunity for financial inclusion for everyone in South Africa and the continent at large. From myself, Kukulethu Mfuphi, it's goodbye for now. We'll see you next time.